Hello, hello, hello. Happy end of Monday. How is everyone doing? How is everyone doing? Good afternoon, Patrick. Evening, Charles. AP's World, take me to the moon and dump me. Well, we're still in launch mode. Hello, hello. The Go-Go Juice alive and well. Party on. Party, yes, it is party on mode. Pricing everything in for perfection like there's not a problem in the world. There is no fear. Yes. They are giving the Fed. I mean, liquidity is easing up again, giving the Fed wiggle room to keep hiking. Good evening. Good day. Good afternoon. Monday, 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 Daniel. Good afternoon, George. And to the people who don't participate in the chat, welcome, welcome, welcome to you too. And by the way, if you are new here, please do consider giving us a chance and subscribing, ringing that bell, and hitting the mic button. Again, by the way, new Futures Edge podcast is up today. So that has been released also. We had really light news days, but consumer board leading index month over month. Again, missing to the downside, weaker than expected. And this is like literally 9 for 9 for the last 9 recessions. So, but hey, let's just price everything for perfection. The market will do what it's going to do, causing the most pain to the most participants, but you can take advantage of it in tactical trading mode. Tomorrow, the services, composite of manufacturing, PMI flash numbers coming out 15 minutes after the open. Red book, very minor, right before the live stream. Then we have Richmond Fed. That's about it. So minor numbers tomorrow. But let's see if we get a little profit taking going into turnaround Tuesday after Mania Monday leading into turnaround Tuesday. So keep an eye on that. Only healthcare was really pausing big today. A little pullback in some energy. But go juice, taking off a lot of those potential doubles. So a lot of those disappeared with this. So we'll take a look at things there. Technology, consumer cyclical, and communication services still solidly in risk-off mode. I hate the term, but so many people use it. We will call it risk-off rally. The risk-off rally. But those are the big ones. I mean, some of these PEs are getting ridiculous again. Literally ridiculous. Going into a potential recession with decreasing earnings, and people are now going to these chasing things to the moon. But that's just the way it is. Trade the pattern. Don't worry about it. Trail the stop. 100, pretty much 99.9% baked in for that 25 basis points. Solidly in greed mode. Only Logitech after the close besides some regional banks, but nothing really market moving after the close tomorrow. Keep an eye on Verizon, Johnson & Johnson, Lockheed Martin, Halliburton, GE, Raytheon, 3M. So nothing that's really going to make or break the market, but it's definitely things that can change the direction for a few of these companies. So I am keeping an eye on some things tomorrow, but I don't think there's anything that's really going to come out and potentially smash the market. Now, Microsoft, that can more so move the market since it's a mega cap tomorrow afternoon. So that's going to be more important then. Let's see. Come on, mousy. Don't fail me now, mousy. I just charged you. All right, so solidly up, and away. Hey, John A. Hey, Nas Industry. Hello, Options 22. All right, so coming up, we had that first little key area. Harmonics is 4,050 area, 4,051, 4,052 was the harmonic. spiking through there and then backing off a little. You can see right into there, pulling back to the nicely to a 1 hour rotation zone. If we do break below this key low formed at the 1 p.m. bar, 4,016.75, I'm talking tomorrow during the day session, there is a really nice clear path coming down here to test some breakout areas. So please do keep that in mind solidly through that 87.5. Didn't update this just yet. Have to flip around those harmonics. So the key area on any pullback now is 4,000 to 40.20, and we are solidly in positive gamma mode, so you'll get dealers selling into this. Although with the rate of short-term option expiry going on, we can still get decent gamma juice to the upside. Next key level, we take out today's high. Remember, this is in trailing mode. We had the %B buy from Friday, so it's just in trailing mode. Now, we are probably going to get to a pretty significant, unless this really takes off, we might be setting up for at least a divergence forming setup, but nothing I'm concerned about yet. Weekly cycles still have a way to run to the upside. Let me just pull this channel off to the upside for now. There we go. So is there any new buy signal? It would just been of the break to the most recent swing. Other than that, it's trail mode. So that's key going into that. I am paying attention to if we start breaking down below the 1 hour rotation zone, but in overnight, the major support now isn't back until that 4,020, then 4,000 area. So there's not much to do there. NASDAQ, you got the rocket ship higher hitting the next harmonic, that 75%. By the way, this is why I don't pull off harmonics right away when it blasts through them. See how we barely even paused here? I like to leave them on. I've talked about this before, because when you blast through them, a lot of times when you get the pullbacks, you'll retest it so it can still be utilized. So I'll wait for that retest level. Okay, just a little tip there. Don't just discard them immediately. Oh, we blew through it. You know, keep them on for a little bit. Keep them on. Just a little harmonic tip. I'm watching the 1 hour rotation zone, 11,860 area for the breakdown. That takes us into a clear path. Then this is where I will utilize the next 25% harmonic, about 11,814 to, this will be rising to 11,790 for my first key area support. We break down below there. Then I'm watching closer to the breakout area. But what do we have? We don't have a fantastic pausing bar just yet. We might be getting it by the close of the session. So we can use this on our short-term harmonics. So, fantastic levels. Loving it. Break above today's high. 12,067, another stop reduction. Key target, remember, when we closed above the 62.5, the key target is, I was using the 87.5 where we paused, the 75 where we paused today. But now the next major target's at 87.5, and now we just got it reinforced with the forward harmonics. So 12,140, 12,150 is the next key target area higher. And the first harmonic target is where, sorry for dog barking in the background, 12,067 area, which would reconnect it with the 200-day simple moving average. So up in here, there's a lot of topping area. You see here spiking into there in November, into that at the beginning of December, through that, and then middle of December, and all 3 times price rejection up in this area. Not saying that has to happen again, but this is definitely, if you've been lackadaisical with trailing stops, be watching for potential at least pullback areas or potential topping patterns. Don't get complacent up here. It's not a place to get complacent. The Dow, which has really been lagging on this recent move, little 15-minute double top, hitting the first level right there, but still stop reduction right there. The key stop area after the stop reduction is 33,768 on a closing basis or 33,807 on a trade through basis. Other than that, we roll over, still going to be utilizing the 33,547, 33,500 targets to the downside. Also, I've been getting questions on clear path stuff. A clear path move isn't a trade trigger. It's a way to come up with targets for a triggered trade. I'm seeing people reaching out saying, "Oh, we just closed in a clear path. I should put on a position." No, you need a trade into that area. And then you can utilize those as targets. And targets can be used for profit taking and or stop reduction. But just going into a clear path is not a trigger. Russell, we do have a potential double top. Russell coming up, that 87.5 from the last little swing. The Russell is a bigger potential double top. So that's the one major topping pattern I am watching, but again, we're a long way off from triggering it. If the Russell breaks out, this is again in topping area from September, mid-September, mid-November, beginning of December, mid-December, mid-January, and we're back up there again. So, hey, if it blows through there, you could get a lot of stops that are sitting up here, but the next key targets are 1937 and 1948. Hey, Dave. Still hear you clearly despite the barking. Yeah, that's Roscoe. He's the barkiest one. It's his dinner time, so he's excited. He's excited for dinner. What else do we have? We got the DAX still not in potential double top territory and still not closing on the daily above the 62.5. So that's what I'm keeping an eye on there. Notes. Continued the pullback, but there's not a fantastic pattern set up just yet. So nothing to do with that. Dollar index, still watching. Still can't get above the bottom of the rotation zone. So that's still what I am watching. If we break down, though, below this 101, we could make a very quick trip to 100. So there's a scalp trade down there. Nothing going on with the VIX. The crude. Still, nothing's changed. Watching for this pullback. Now, what's interesting, though, is if we do trigger, we have the double bottom triggered. Very patient with getting into a position like that because of cycles at the top and overbought. It could pull back to the rotation zone and not trigger this little mini double top pattern. If it triggers the double top pattern, then it would be watching for a bigger pullback that doesn't invalidate the double bottom. If it doesn't invalidate the double bottom, reward to risk could get really interesting. If it comes back in this rotation zone and like it triggers a %B buy, that could be a nice early entry for this double bottom triggered pattern. So from my perspective, it's still being patient. Not much to talk about in gold. Still, it's just in trailing mode there. Not much to talk about in copper. Silver, still little spike down today to the 50, but back into the sideways consolidation. These will roll over if we get movement on in the dollar. Nothing still to talk about in the yen. No topping, no major topping pattern. I am keeping an eye on this little mini double because that could resume back down to retest the lows. But that would need a close, preferably on a 4-hour basis, 129.86. So that's the only way I'd be looking at the short side again right now in the yen in the temporary, because we're not putting pressure on the JGBs, the 10 years yet. There's no pressure on those yet. From the euro perspective, still tried to get closer to that 50 price rejection. Again, currencies have been very, very quiet, just following their short-term trend. But we're getting, again, to overbought on the euro. I'm going to be paying attention to another rollover pattern. If we do eke out higher, it'd be that 50% level, but there's not a great setup in there from my perspective. Pound, the only great setup at this point is the big topping pattern, though if we break below about 123.10, I'm going to be watching for a quick trip to the bottom of the rotation zone. Bitcoin, trying to do another rotation back up, but nothing much to talk about there. If it's trading to the bullish side, it's just be in trailing mode. Tesla, I put on the harmonics from this low, Friday the 6th, to the high of the 18th, which giving me 145.40. I know I was asked by some people in Discord on that, and I put in 145.40, and where high was 135.35 area. It's now back in to the rotation zone. If it continues the run into earnings, the next key target is the 200 on the weekly, about 167. Short-term targets. Short-term target that I would not ignore, though, I'm going to bump this level down, would be about 140, 148, 147.80. That's the next short-term target. And again, that is a weekly clear path move, but that's where you go down to that daily. And here's a key breakdown zone. Then above there, I'll just put these out there now so I don't have to keep reiterating them. The next target's 153.80 area. And then it would be for the 200 on the weekly. No new bull market. Again, if I got a long-term signal for something, valuations are getting stretched again, but they can get more stretched. It's just piled into risk assets. You know, this also reminds me, we've had some of these, like 2001, January 2001, you know, where it was just a ridiculous tech rally before the next major rollover. This is just tactical trading. This is not. And again, people want clarification. What's new bull market? Well, there's some systems I follow I can't release because I don't have the rights to release them, but they are not in long-term buy mode. Valuations aren't everything's priced into perfection. So in this instance, we use tactical trading and these shorter term signals. But this is not where I'd say load up your portfolio. You know what? I think people are still better to be in like short-term bills. You know, you're going to get another rate hike. Short-term bills, and complement it with some short-term patterns if you trade that way. If you don't trade that way, go into some dividend stocks when they're in good positions only, because on any pullbacks, you can still collect a dividend, which will offset stuff, and then keep some money in liquid bills. You're better, you know, to do stuff like that instead of trying to load up a long-term portfolio, because, yeah, could this run for a couple more weeks? Easily. But is this the beginnings of a new bull market? Not from a valuation standpoint and not from a technical level standpoint. So, that's why it's tactical mode. By the way, the Microsoft double is still barely in play here. Keeping an eye on that, still going into earnings. but we get probably another push higher. It'll be off the table. Key pullback is this 240 area. Keeping an eye on that. But a lot of the other doubles, like Apple coming up, gap fill still left behind through the harmonic, and then the gap fill, that target's completed into this little downtrend line. If we get the key close well before their earnings above 143.75, there is a play with a clear path move back to the 200, about 148.90. That's what I mean by another tactical play. And that doesn't have to trigger tomorrow. We could get a pullback move, a reload pattern, a pullback, then if it reloads and gets that key close, you could see that quick run to right in front of 150, 148. That would be a tactical trade. That is not the kind of thing I want to back up the truck, buy Apple, and slam it in my portfolio and say 200, here we come. So, those are the kind of things I am talking about. NVIDIA, the little double that never came close to triggering, off the table. Your next levels in NVIDIA, 200. The next major, 194 is the minor, 200 is the major. Again, I mean, this is going to get interesting on their next earnings report. Again, this thing's getting priced to perfection. That does not mean it's tradable. Would I be slamming NVIDIA into a long-term portfolio? There is no way on this planet. Look at the PE ratios. Where's this back to? Again, we're almost trading 76 price to earnings going into a potential slowdown. Can it run? I mean, a lot of people are saying this thing's going to new highs. I've seen out there, we got an inverse head and shoulders. This thing's going to new highs. Could it? Theoretically. You know, this thing goes back to new highs. You're looking at well over a PE, well over 100. Well over. So, you want to use levels in the short term. The next key level is 231.57, 252.14, 272.71. It's technically reversing the whole move, but look, it's really lining up nicely with this. There's your NVIDIA levels. For on a bigger picture. Would I be chasing it higher at this point? Not much higher. So, yeah, Roscoe B. Coltrane. Roscoe, another one of the rescues. I don't know how they named him Roscoe. Don't have that information, but he's our Roscoe dog. So, yeah. Remember, harmonics are an area. It's an area to watch for reactions, trying to hit a price exactly. Do you think we're going to get a rug pull here soon, the spiders? I think we're going to get a rug pull. I think, again, the market's being priced for perfection. So if you have any big company miss or any bad news come out, it could trigger something. I mean, right now it's in rah-rah juice mode. It's piling into, and the short squeeze is back on. Another thing, if you're trailing in Intel, Intel now has a short-term double top, so this is really good to, if you're not in it and watching for something, if this does trigger, you now have key pullback areas to target. But this would be, if you're trading around core position, this could be a trail. Again, from my perspective, in trading around a core position, you're always keeping something on. But this triggers, I'd be lightening up and then looking to re-add lower. And you still have the potential bigger double bottom in place. So, well, Tardy slipped 4 royal palms, but you are here. Did Natty Gas double bottom? Natty Gas, did it double bottom? Well, where's my Natty Gas? Not the NASDAQ. The Natty Gas. This was, yes. This was a mini double bottom. Hitting the first target, so it's a stop. Stop raise. Stop raise. Now keep in mind, when you're trading stuff like this, clearly against the rotation zone, so it's one of those that's a slightly lower probability. So you have to keep that in mind. But yes, triggered pullback. The level now that would invalidate the pattern is a 4-hour close below 326. 326. The walkaway area, a trade through area is 320. Other than that, the pattern's still in place with the major target being 366. People don't mind overpaying for stocks. I completely agree. Well, people have lost the sense of, even Wall Street people have lost the sense of valuations. Valuations became unhooked from reality in zero interest rates world. But people, I still hear it, valuations don't matter. So I'm going to be paying a P to E in a more interest rate intensive on a company that's losing full growth mode. I'm going to be paying a PE of 80. That doesn't make sense. Doesn't make sense, but things can remain. You're going to have a lot of people. Remember, even on the Wall Street, the vast majority of traders on trading desks now were not in that. A lot of them were still in college during the last 2008, 2009. They weren't on Wall Street then. And for the most of their career, they've been in very low interest rates modes. Valuations, value stocks, garbage. You leverage to the hilt with cheap money. You know, there's going to be a rude awakening. I did put in the new Husband article in Discord. Again, valuations matter, especially for long-term portfolios. You should read that. I put it in the article section. I put that up there today. Why I put this stuff up? Because we could theoretically stay in tactile trading mode. Yeah, you can get longer swings, you can get shorter swings, but we could stay in tactile trading mode for theoretically a few more years where it's not just buy and hold. You know, you'll get these 20% runs. Then you can get 20, 30% pullbacks. So you can easily keep a portfolio just, it's not doing great returns net. Now, that's why I think more people need to learn some shorter term stuff. And I'm not talking day trading. I'm talking about shorter term concepts, trading around a core position, trading some of these swing moves. Instead of just, hey, I'm just going to buy something and keep it in the portfolio forever. So, F cell. Yeah, F cell's back to its 200. It's sitting at a very key level right now. A very key level. I just love this. I just love this. Again. You come through here though, if you're playing this from the long side and you do manage to get through, this is a pretty significant topping area. See, top from November, top from beginning of December, top from mid-December, little short-term top from last week, pull back to rotation zone, rotation back up. If it does get through there, the next key target's $4. And then above that is 436. What I'd be keeping an eye on though very close is if it does pull back and trigger this. Because then you could easily see a retest. Now that could go off the table. If it breaks squarely above the 200, then I would be targeting this $4 area. But if we get a rally fizzle out and you get the pullback below 306, you could easily see a return to this 250 area. All right. So there you go, Royal Palms. Great harmonics and momentum bars waiting for a pause to enter. Example in Russell today. Look at 15-minute chart with harmonic retracements from the low today at 6 a.m. Eastern to the high. Well, let's maybe you should take over, Sterling. You got a camera? We could put you on live stream. You know, we could just, you could replace me. You could replace. Maybe we should have Sterling replace me. That would be good. I get some time off. It doesn't matter. I mean, you have these two lows here, so whichever one they're virtually the same area. But the nice little pullback, the multi-bar momentum into the 50 to 62.5 area with moving on up. And now remember, that's the area you watch for a little reversal. Now on a closing basis, just friggin' stalling out at that 62.5. So you got targets so nicely for the upside in this clear path tomorrow. Even 15-minute, if it resumes, even once it reopens, theoretically. But putting together all the concepts. Sundays with Sterling. There we go. You need another career? Sterling, you need another career? You know, you can be, do cars by day, live stream by night. All right, you're welcome, Royal Palms. But join you on the stream, that'd be cool. Well, hey, if anybody ever wants to pop on the screen, I can, just like I bring Bob on in guest mode. As long as you're not going to do anything silly. I don't mind bringing people on if somebody wants to come on and say some stuff. You know, we got a good community here. He could be the Russell streamer. What do I use? Double? Double is a specific pattern. I use the doubles for doubles and head and shoulders. I use harmonics. The harmonic retracements are always the same, and I look for harmonic expansions. Those are the 12 and the 25. So doubles are only used for doubles and head and shoulder patterns. Those are the targets. You don't want another career? Sterling, come on. You're not busy enough as it is? Just like sharing the effectiveness of your system. I appreciate all you put in here. I am just having fun. But if anybody ever does want to consider jumping on, you know, saying hi to the group, I would consider it. You know? Hey, we like to have a good time here. I'm thinking, is there anything else? Not really. We got Verizon tomorrow. We got Verizon tomorrow. The key line in the sand is 37.56 on any gap down. Right now on the weekly, this is sort of a channeling pattern higher with cycles rolling over, but there is no great play going into earnings. especially with daily cycles at the bottom. I'm actually watching to see if this does pop up back into the high, if we form a better topping pattern, and then we'll get the rollover play. So if I'm looking for a double, I use the double targets. Yes. If I'm using a head and shoulder, I use the double targets. If I'm just looking for expansion moves, I use the harmonic extensions. So just remember, the only time you use double targets, well, you can also use double targets technically. I'll use them for trading horizontal breakouts. Because that 50% target from horizontal breakouts is very strong. What are the probabilities on a continuation on the momentum bar pause to resume? It is very high. It depends again on the time frame and the type of market you're trading. But if in momentum pause bars, especially on shorter term, you can get probabilities above 80% with momentum pause bars. By the way, I wanted to point something else out. You reminded me, again, for people learning the tick, where we started to get, you see how it was holding up really nice this morning? Then you started to get the fading around European close. Little bounce up, but then it really shifted. You see this? That was that pullback shift. So this is when, okay, we're pulling back and look at that tick breaking down. You can clearly see it. That's when you don't get as aggressive. Now, the tick, so when it starts bouncing back and spiking into 1,000, you be aggressive again for upside moves. Okay? But did you see the distinct change on that more pullback? It started fading European close. You also see here, just trying to teach stuff. See here how that was, and this is even going back to Friday, but you see here it's just a really nice, how waning tick momentum, then it broke down, and then it resumed its end of day bullishness. Wanted to cover that also. I would have been ticked off if I didn't cover that. All right, that's where we stand. Okay, you got it now. You love the tick. Trading in a box range. I mean, some of this, you don't need a lot of magical tools to learn to read price action. If you really learn to read, because you can use it for trading stocks, you can use it for trading futures. You're watching the broad market tick, and it keeps you out of trouble, or it keeps you in moves longer. Unavoidable at TikTok. That was the perfect, I had to go with that. So AMD getting closer to the weekly double bottom trigger after today. Well, thank you, Dave. And then I'm wrapping it up for now. AMD. We have a lot of these semis. A lot of the semis are setting up for, and remember, Intel has not triggered yet on the bigger double, but I am keeping an eye on a number of those. So you see, pulled back that 75. Now here's where we will use the double trigger. I mean the double thing. Why am I using this? Well, A, it's still longer term in the trend, and B, this move goes into the wick. And that's a no-brainer. So when you see on one side it goes into the wick, use the other side of the double. And look at this. Here's another way. Because people are like, well, when do I use what? Well, the longer term trend is still down. So I'd use the conservative targets. And there's no harm with even before it triggers. Now, once you're in it and you set up your targets and everything, don't be adjusting a mid trade because you already worked out reward to risk. But look at this. Look at this. Let me just delete this real quick. Let me take off a couple of these lines. Now, don't be mistaken. Oh, it lines up exactly. It's got to be higher probability, so I'm going to increase my risk. No, but look. What does this line up really nice with? Look at this. So, and why do I love something like that? Because it gives me, I got the double roadmap, but let's say it's traveling up here. You get to the first target even, and we close above the 62.5. What level do I love after that 62.5 close? The 87.5. Look at the full target for the double. Reversing this move. So there. So we shall see. But that's your nice little, see how we constructed that? And now we have a potential roadmap. Could this get to earnings and not trigger? Yeah. Could it trigger well before earnings and run up to the first target? Also, here's your daily. Look where the 200 is. In this instance, I like a close above, since we have a very, 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 very key moving average. I think I said very enough. I like the close above the moving average personally to confirm it. I did do some testing with very key moving averages, and when it triggers and it doesn't manage to close above the moving average, the probabilities drop by a few percentage points. So in this instance, it doesn't drop it enough that negates it. It just means I would prefer a better reward to risk ratio because I'm losing some percentage points on the probabilities. So I try to get a better reward to risk ratio. So there you go. Oh boy. Cheers to technical analysis, muscle cars, the dead, and PTP. Well, thank you. Hello, Dr. Michael. Hey, Mikey Numbers is in the house. Mikey with always the fascinating numbers. So, Mikey Numbers in the house. All right. Can we take a peek at rum? Only in a drink. Only in a drink. Here's the only thing I'd be really watching. I mean, if you're trading it from the long side, you got a key trailing stop level. Paused at the 200. Paused at the 200. If you break through that 200, the key closing basis you should be watching is 1065. Because then your probability shift. Not only are you through to 200, you're close above that 62.5. Only thing that puts a kibosh on that in the short term is the potential double top. So there's your rum. Spiced rum for Dave. You are welcome, Jacob. All right. All right. If anybody, when it rolls around the summertime, if anybody wants like an insanely good, if you like tropical style drinks, I will share my recipe. I was a bartender years ago. And I have a custom recipe for a planter's punch with fresh fruit juice. You have to make it with fresh fruit juice. But roll around summertime. Somebody reminds me, I will share that, and it will literally floor you. It is, but it is good. Oh, wow. I mean, you want some tropical summer drink to just kick back with when you don't have anything to do for the rest of the day because you will not be doing anything. I guarantee. There will be no further action. This is something you don't want to drink before operating a lawnmower or any kind of equipment because you could do serious bodily harm to yourself. But if anybody's interested in that, remind me when we get into some warmer weather because I have perfected it. Dave will remind me. I don't know how to invest in this kind of market, and the stocks I own just don't do this. This is why I'm sharing live streams. And if you don't know what to do, you're better to go into risk-free instruments right now. Okay? And you learn. You follow along. And you don't put money at risk that you don't understand a system or a concept. But that's what's nice. With the Fed hiking probably 2 more times, you're going to take your short-term rates close to 5%. That's not a bad rate of return in this market volatility if you're not an active trader. So keep that in mind. You know, people, 5%, I want 30%. I want NASDAQ to double my money. Okay, we're not in that market. You'll get these rip your face off rallies, but if you hold too long, you can get your rip your face off declines too. It'll steal your face right off your head. Not to quote any famous band. All right. I'm going to wrap it up for now. I have a weird whiskey drink that's refreshing. Diet 7-Up and Knob Creek. Huh. Never tried that combo. It has to be Diet 7-Up. It has to be Diet 7-Up. The man is on fire. Fear and greed are the enemies of profit. Very good. All right, we will wrap it up for today. With that, I will see everybody in the morning. Have a wonderful evening. Talk to y'all later.